Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a returning guest. He is Panama Orange. Panama, thanks for coming on again.
No problem.
So whatever happened to Don? I haven't heard from him in such a while.
Well, I don't think he's coming back to YouTube. You'll have to ask him, on that, but he, just had some, people were flagging his videos with no reason or without justification for, in Google on YouTube, it's easy to get trolled, kind of off the air, basically. And that's, he had various people that disliked him, which I think that might have been the culmination of, you might have seen in the news how Russia has a huge full-time paid trolling department operating out of Russia to go on YouTube, go on comment sections, and militantly talk about how great Putin is and go after anyone who says other. Otherwise, and it's funny because now people do their work for them. Because if you look in the libertarian community and the stacker community, most of them are pretty pro-Putin. But because there's sort of a group think in that culture, just like there is in mainstream culture. I mean, there's one thing that's become clear over the past decade, it's that alternative, or people who consider themselves to be outside the mainstream or in these alternative freedom-loving mindsets, they still have that group mentality of where the group decides, X or Y is true, and then everyone has to abide by that. So that and just other, it's...
Yeah, I mean, there are trolls everywhere. I mean, I even read, I think in the alternative media, that there are individuals going on social media sites just harassing individuals if they don't conform to a certain point of view. So
Russia got caught actually literally paying, like they had an operation where they actually pay you to sit there. You can go look it up in Google News. It's a certain city in Russia. I think it was in St. Petersburg. I don't remember the exact city, but I'm not going to get into the Putin bashing here because after what Germany did to Greece, if I were a country between Russia and Europe, I would not choose Europe at this point. I mean, it doesn't mean I'm endorsing Putin or Russia. Well, versus Europe at this point, I could see why someone would make that decision. I did not expect Greece to be treated that badly. I mean, everyone knew there'd be like another bailout of some kind, but I didn't think they would come in and seize all those assets and lock people out of their banks for 2 weeks. And it was a lot more severe than a lot of people anticipated.
No, it's going to get a lot worse. This is, I think, just a test drive for the future, just like we saw in Cyprus. That's just only the beginning, in my opinion.
Yeah, I mean, like Chicago, I have a lot of distaste for Chicago. I mean, just the...
But you live in the suburbs.
Yeah, well, no, I live right on the border of the city. I live like 2 blocks from... So I don't live like in the far suburbs. On the northwest side, so I'm in the city all the time. But Chicago, its financial problems are so enormous, and there's so many billions of dollars in the hole here. And you can see it. They're trying with the tobacco taxes. Cigarettes are like $12 a pack.
They just raised the sales tax again.
Yeah, well, no one is riding in on a white horse to save this city. By the way, I'm not entirely over a flu yet, so I might sound kind of crappy, but bear with me. But anyways, Chicago, I think people in Chicago have this weird fantasy that some rich Saudi prince or Warren Buffett or or Obama is going to write and just make this huge pile of money appear and just hand it to them, which is what they need, basically. There's nothing else that'll save the city.
It's the pensions. I mean, if they don't want to reform the pensions, then there's no hope. And Rahm doesn't want to do that. Well, or he's tried to, but then the teachers
the entire
Go
state
ahead.
of Illinois is bankrupt. Like all of northern Illinois is completely horrifyingly bankrupt. And people just, again, they think like, oh, Obama oh, okay, well, look what he did in Detroit, where he screwed over all those union people with pensions and stockholders. And in Detroit, there's people, they can't get clean water, for God's sakes. So if that's the model of how Chicago is going to be fixed, then and Chicago is a big problem because it's a major city in the U.S., obviously. And Chicago is an example of, if you don't have the New York bubble with real estate and property, and you don't have the tech bubble in San Francisco, what is just a major American city without those two bubbles? And the answer is it's a train wreck. And those two bubbles we have in New York and San Francisco, the money and the investment, it is not leaving those areas. It's sitting hyper concentrated, like something out of the Middle Ages, out of the Dark Ages. We have a few tiny little cities, and all the wealth is crammed in there. It's like Brazil. If you look at the history of Brazil and modern Brazil, that's where America's headed very quickly. And it's basically there now if you do a heat map of where all the money's concentrated. And I think people, and I disagree a lot with Don on this and other people, that, well, they have to loan the money out at some point. No, because if you give unsecured money, unsecured loans to people outside of those little super concentrated areas, you will never see that money again, because the court systems are getting clogged with, immigrants alone are just, I'm not bashing immigrants, so I'm just saying, if you've been to any of the court systems, like in this city, it is just packed, because there's so many poor people being jammed into the criminal system for minor offenses and, traffic tickets, or they were drinking and on their porch or some BS. I'm telling you right now, if they start lending all that money out and they don't have it tied to being able to take an asset from you or take like your kidney or something, they'll never see that money again. I think they know that, and that's why they're piling it up in such hyper concentrated areas. And it's the way it's working out is we can't even really, you can't even mount protests in these cities, because it's like in Chicago, for example, not even one of these bubble cities, it's now $4 an hour to park on the street. So you can't really
That's why you take the CTA or you take the Metro.
Well, but the reason we saw like Occupy New York or Occupy Wall Street, it didn't have the stamina, is because they had that overpaid, huge ego police department in New York, completely overstaffed. Ever since 9/11, really, the New York Police Department. I mean, they've got their own like Navy. They've got rocket launcher. They've got all this federal money was thrown at them, and now all this bubble money's been thrown at them. So it's really hard to get some kind of protest in the streets. Whereas in Europe, we keep seeing all this unrest and revolutions because you don't quite have those palisades of wealth guarding where everyone's ruling everyone. But the fact that the elite are giving us Hillary and Jeb Bush and telling us,
What about Donald Trump, though? Is he the wild card? Or is he...
This is like the Ross Perot thing years ago. That's why Trump is getting so popular, because nobody wants Hillary or Jeb, even though Fox and MSNBC are promoting these guys. And it's a really sad
Maybe it's time for a sea change, and it's not going to be an establishment pick. Even though I don't agree with Trump.
Well, no matter who we get in the office, structurally, there's something happening in this country, and I've talked about this before in videos I've done with Don. I think the last time maybe I did a video with you, I might have gone into this, but the service industry in this country is getting gutted by automation. You go to any brick and mortar store. I went into this huge Staples office store the other day. You could have had like a college basketball game in there. There was 2 employees in the entire store. I went to Best Buy the other day to grab a cord. I needed like an Ethernet cord. And I swear to God, there was like 3 guys working in this whole store the size of a city. And I mean, the brick and mortar stores, they remind me of Blockbuster right before it went under, or they remind me of Circuit City before it went. You could see them dying right in front of you, and that's a big deal because only like 9% of jobs in this country are manufacturing. And when they did NAFTA, and when even in the 80s, shipping all these jobs to Mexico, shipping them all to Asia. The idea was we'd replace them with the service economy, as Bill Clinton would call it. And that worked until they figured out how to replace all that with clouds and apps and kiosks and self-checkout. And now they just don't need people anymore. I mean, Amazon is crushing everybody by selling things at a loss, being financed by Wall Street, who's being financed by the Fed. So the Fed is enabling Amazon to dump products on people like, get an ink cartridge, go to Office Depot, Office Max, any of these office places, find the cheapest generic ink cartridge they have, go on Amazon, you'll find it for a third the price. That's for any, you can repeat that for any product on the shelf at any one of these brick and mortar stores. So the idea that they can stay in business when you can buy anything there on Amazon, it's not because Amazon's smart. Amazon treats their employees like garbage. I don't know if you've seen all these like 8-part specials like on Gawker about people who've worked in those Amazon warehouses, but there's a reason they have no windows. You can't go to your local Amazon on a tour and see the happy workers. Not that there's many happy workers left because they're automating the hell out of those warehouses. But it's
you notice that the stock price is at an all-time high, like $488 or something like that, or close to its high.
Well, it's completely destroyed it's taken over the entire retail industry. But as far as stocks, by the way, you bring that up, the Dow is sitting where it was in Thanksgiving. And the NYSE Composite Index, the broadest index of stocks, that thing has been sideways now for 13 months. And you have a few high flyers, like an Amazon, like a Google. But what do these companies, what do they do for employment? What do they do for creating jobs that people can get and then go get a mortgage and buy a house for their family? I mean, how many people in this country actually work for Google? Actually, have a job at Amazon, or the guys at the Apple Genius Bar are not supporting a family on that. The 24-year-olds with the lanyards and the spiky gelled hair, they're not. That is not a career that you live off. Neither is shoving things in boxes in an Amazon warehouse trying to get your arm ripped off by a robot there. But I'm going through Kramer's Fang, who he's pumping now. Let's see, that's Facebook. Again, I don't know anyone who works for Facebook. Yeah, I'll bet you don't. It's not like you're going to see jobs like open up the paper. Facebook opens Chicago, hires 7,000 workers. That's not. I mean, or any city.
Unless you live in Silicon Valley, but then if you want to live in Silicon Valley, you need to have a job that pays you $90,000 to survive there.
Yeah, people are renting tents in their yard for $1,000. Tents in their yard. That is, so even if you get one of these juicy jobs because you're in your early 20s and you graduated MIT, so much of that money gets eaten by the real estate bubble from having to live there. But this is like Netflix. Netflix is not a job creator. Netflix is not adding to the economy. I'll tell you what Netflix is doing. All their content is appearing on hundreds of pirate sites for free in full HD the day it comes out, including House of Cards and Orange is the New Black. It comes out on Amazon. Then you go to any torrent site, any one of these pirate TV sites, every episode there full HD. Now, can you imagine if a major film studio, Paramount, Universal, Sony, imagine if 100% of their content and movies leaked in full HD the day it came out. That happens about 5-10% of the time. If it happened 100% of the time, people would be selling their stock like mad. But people they think Amazon can get away with just having 100% leakage. That'd be like you open a video store and every tape on your shelf every day gets shoplifted. And you're like, oh, it's okay, I've got other copies. That's not the point. And the fact that Kramer is even pushing all these stocks that everyone already knows, which aren't even paying dividends, and that's really probably the biggest point. When you look at guys like the Rich Dad Poor Dad author who wrote this big book about the big stock
Kiyosaki.
Yeah, Kiyosaki. But then there's like five other guys. He's a
shady character.
He is shady, but his books aren't that bad. Whether or not he marked them wrong. There's John Hussman. I read his blog on a regular basis. He's in the camp that the market will offer negative.
It's going to crash.
Well, negative returns for 10 years. It doesn't mean he thinks they're -1%, -2% after inflation.
Right.
So he's not that bearish. There's another guy. Actually, he's kind of left wing, but he writes the book The Crash of 2016. I could Google it. I forget his exact name, but he's not some kind of wild-eyed doomster either. He goes very methodically in his book, all these reasons, demographics being a big reason. And he's not
Harry Dent, right?
Well, Harry Dent's, yeah. I disagree with him on. There isn't a guru out there I agree with on everything at all. I can't say one guru that's like, oh, this guy, everything he says. So that's. But there's different people, I think, that have a much bigger, realistic look at the picture. I mean, right now, real estate in this country, housing prices have never been this overextended relative to incomes and employment level. I mean, our labor participation rate, as of the last report, 38-year low. And wages for the bottom 83% have not risen. They've gone down for the last 18 months. They've only gone up for the managerial people in the top, 16, 17%. That is not enough to sustain an economy. If you're paying 83% of people, giving them no raises at all, while tuition is skyrocketing, utility bills are skyrocketing, meat prices are skyrocketing, healthcare costs are skyrocketing, so many things, rent, obviously taxes, all these things going up, wages not going up. And we keep getting told by people on TV, wage increases are coming. And in fact, they keep telling people that so much, they've charted out, everyone expects wage increases to happen, but they never actually appear. We've heard for years.
You can't have that with all this automation.
Oh yeah, why would there be pressure to raise wages when Jeb Bush and Hillary, anyone who gets in, except, I guess Trump would be more hardline, but they're all really pro-immigrant. And I'm not bashing immigrants. I'm just saying as far as pressure on wages, when in the history of humanity have immigrants caused wages to rise? I'd love to see that time. It's supply and demand. And in any other era, if we didn't have all this automation, all these immigrants coming here would have things to do. There'd always be physical, a wrench to turn, a lever to pull. But they're factoring people out of the retail equation entirely. And I keep coming back to retail because if you don't have factories, and we really don't in this country, it's down to like 9% factory jobs. And the factories we do have, they have these new generations of robots that are so cheap and can do so many things that even if the factories come back, and you hear this from Trump, and you hear it from Fox News, boy, we get a Republican back in, and the factories come back. Really, because under Reagan, factories left this country so fast, it would make your head spin. He was not good for factory jobs, not even close. But even if, quote unquote, the factories do come back, the new generation of factories need very few people, and they're going to increasingly need less people. And this era of a factory appears, and suddenly there's like 5,000 people with their lunch boxes going in to work in the factory. That's that era has come and gone, and it's really what are you going to do when you have masses of unemployed people? You end up with Southern Europe. That's when you look at our labor participation in this country rate. When you look at our wages, it is very European going on here. And we just don't want to admit. It's weird that, people forget before Europe crashed, there was a period like up to 2007 where they thought they were geniuses. Their stock market was on fire. The euro was on fire. Remember the euro trading up at like 150?
Yep, when Jay-Z had euros in his video.
Yeah, and this one model wanted to be paid in euros. And you had Michael Moore in his movie Sicko. And I agree with him on, healthcare and some issues. There's other things I disagree with him on. But in his documentary Sicko, he does this whole piece on, wow, look at the Europeans. They take these really long vacations, but look, their stock market's doing better than ours. Look at how strong their currency is. Yeah, well, things always look like that right before a crash, and you look like idiots. I mean, the Chinese market, they all look like geniuses a few months ago. People were buying Shack. By the way, Shake Shack dropping 40% in 2 months, that is horrifying, because they were pumping people into that thing on CNBC and on TV. And I'll tell you, that's...
Remember 3D printing stocks as well?
Yeah, it's not just that. 3D printing wiped people out. But you had guys on CNBC pumping coal, pumping copper, pumping natural gas, pumping...
Some people are going to say pumping gold as well.
But if you add up all these other... And steel stocks, if you add up steel, natural gas, coal... Gold was just one commodity. They were pumping every commodity, and they were pumping them at the top. They were pumping them at the recent top and the last top a few years ago. Now, as far as getting to gold, I started buying gold at GLD 123. It peaked at 185 during the bubble a couple of years ago. I waited a long time to start liking gold again. Now, there was a period before that where I bought some silver when it dropped to like 26, and it had a nice bounce. And then up, when it got into the 30s, there was this bear flag that appeared. And, it's funny, when I pointed that bear flag out back then, Contango Down did a video rebuttal about how it wasn't a bear flag. And I like the guy, I'm not bashing him, but it was like,
that guy disappeared off the wall too.
I like most of his videos. I don't mind being questioned or criticized, but obviously that was a bear flag. But it's weird that if you like metals at any point, you instantly get thrown. People start thinking you must be a gold bug and you've always liked it. It's kind of like, I know people that have only gotten bearish on the market very recently, and yet people call them, oh, you're a perma bear. You must have been short from 2009. It's like, the fact that people immediately just presume if you like something, you always disliked it. For example, me, back in October, and you follow me on Twitter and whatnot, we had this really big crash in the market, the Ebola scare. At the time, I did videos of Don. I charted on Twitter. I said, look, we're going to bounce several thousand points from here. I even drew out this, megaphone pattern, because this is going to change the election. And I think it did. I think the Republican victory in November was partially due to Obama's total passive-aggressive laziness on the Ebola scare. And he was. I mean, that's how Obama does everything. It's funny when people talk about Obama.
I think people just lost confidence in him. I think it was before that too, though.
But he handles everything so passive-aggressively, and everything with him is a deal behind closed doors. Where
he's probably blackmailed, but not getting into conspiracy, but go ahead.
Well, it's the way he manages. It's the way he's governed since he got in. He always does these deals at midnight in some back room with the Republicans, with businesses, and then he comes out and tells you, this is what we just did, it's done. Deal with it. And it's like he has this very condescending attitude. And that's another thing, too. Jeb has that same condescending. He's just an unpleasant guy, Jeb. And he talks down to people like their children, kind of like Obama does. Like, Bush's brother was kind of, stupid and goofy, but he was more likable. He didn't talk down to people. And Jeb is like another, you could see already he's another Obama, where he talks to you like he's a third grade teacher or something, and you're the student. But anyways, getting back to October, I said very emphatically, look, and I charted up, we're going to bounce several thousand points from those October lows. And it's funny, we hit the top of that megaphone resistance, and we've been like sideways ever since. So I thought we hit the top, and then we roll over. Well, we hit the top, and we just turned into this horrible sideways ever since then shop. It's funny. I'm watching a lot of people since then, and they just keep presuming every move up is the big breakout. Like every time the Dow or something is at 18, gets into like 18.1s, near 18.2, everyone's like, this is it. This is the huge breakout. Then Dow 20,000. And then what happens every time? We roll over. And they're like...
The thing about a breakout is that you're going to have a Fed rate hike most likely in September. If that doesn't happen, then I'd say that we're going to still be sideways. But assuming that we do have a rate hike, that means that there's going to be a sell-off in the bond market. After that sell-off now, you're going to have to ask yourself, where's that liquidity going to go from the bond market? Is that just going to go straight to cash, or is that going to go into the stock market? And that's what I have trouble figuring out right now. I mean, I follow Martin Armstrong, and he said that after they raised the hike, after this pullback, this liquidity is going to go into the stock market, and it's just going to surprise a lot of people. And looking at Martin Armstrong and what he's predicted in the past, he tends to be more right than wrong, but who knows?
Well, I think demographically, as dumb as baby boomers are, the fact that we have a stock market being led by a NASDAQ with a 0.8% dividend, that the level of stupidity for someone in their 60s to be sitting in stocks with a dividend that low that's real. Like I'm 37, about to turn 38. I could not sit there and buy something with a dividend that small on a parabolic chart because it gives you no insurance at all. Years ago, there's all these great dividend stocks. I mean, during the Apple crash, I remember writing explicitly many times, hey, down here, the Apple dividend's actually, this is a good dividend you're getting. So even if you're stuck here for years, if you're buying down here at this price, you're getting this yield. Up here, though, obviously the yield is terrible, and that's true for tech in general. And if you're a baby boomer in your 60s and you're buying stocks here, if there's one more crash, the level of fear, you can't elastically sit there and take another crash. And these people went through the tech crash in 2000, the crash in 2007. So my view on it is baby boomers, 20%, 25% decline, they will take their money out and they will never come back till they're, they will take it to the grave, as they should, because they're not terribly bright, and baby boomers are the most spoiled generation in human history. But even someone that dumb in general, you burn their hand on that stove 3 times, and they turn on TV and they see Larry Kudlow and Jim Cramer, these guys who were getting people in the stocks, not just them. If you look at the entire CNBC crew, it's all people that were trapping people with stocks in 2007 at the highs. Not just stocks, but like the worst possible ones, copper and China and natural gas and all this crap. And then tech stocks in 2000. And I really think the mistake a lot of people are going to make is, well, they think if the market gets down 20%, you're going to hear, wow, this is such a great buying opportunity. But baby boomers are not going to see it that way. They're going to see it like, okay, I'm 66, 67. I cannot go through this crap again. I cannot go through another freak out crash and survive.
Speaking of baby boomers, they have a lot of bonds. They own bonds. So you have to remember that if they hold like these 30-year bonds or whatever they're holding and you see a sell-off, I think that's where they could get hosed. I mean, I'm not saying that interest rates are going to go like what they did under Volcker. I'm just saying if it goes to normalized rates like 4% on the 10-year or 5%.
I think rates could absolutely skyrocket because China is about to run out of money to buy our bonds at such low levels. China has to keep their property market and their stock market from crashing. They're basically nationalizing it right now. They're not going to have the money to keep buying it. And without China being that constant bid, we can't get away with keeping rates under, say, 2%. So I think rates could go above 2%, and not because the economy's improving, just because China's like, hey, it's either we take care of things at home or we're going to end up with a revolution. So we're going to have
I
to.
think that Europe is going to be screwed first when it comes to the rates, interest rates. And then in the United States, if you look at what you're speaking to earlier with Chicago, I think some of these muni bonds that Meredith Whitney was talking about, her fund actually got wrecked because she was, I think, way too early on the call. But what she was talking about before, about these muni bonds, like in Chicago, if you go to like California bonds, I think those bonds in the U.S. are going to get crushed. And then if you look at like the 10-year yield, I wouldn't be surprised if it goes to 4 or 5%.
Well,
Even though the conditions are horrific right now in the U.S. Not horrific, but they're not ideal.
Well, the thing is, in America, and I've had this debate just talking to various people, the gap between income and employment levels and housing prices in America right now is much worse than at the last housing bubble peak. So people, and yet you see baby boomers flipping houses. You see a lot of people trying to get into investing in houses and flipping this. And that to me is where the fact that it's even happening is causing more risk to our system, because that rubber band between the fundamentals and the price is much more stretched. And that's, true for the market too. If you look at the actual real economic activity right now and you look at the market, the gap between them, like since October, basically in October, the economy just started rolling over. And since then, the market it's kind of hovered, and you get that divergence. And this reminds me so much of 2007. 2008, people say it was so easy in hindsight to see that top, and that's complete BS. You go back, look at the charts back then, it's like now. There was a lot of choppy, sideways action. There was no blow-off exact, this is the top moment. It never gave it to you. It gave you a lot of chop, kind of like we've had, for 13 months in the NYSE, which is 2,000 stocks. And sometimes that's how tops happen. And tops don't always happen with a big parabolic spike. They happen sometimes out of severe chop and divergence. And I'm sort of there's a lot of things I've disagreed with Peter Schiff in the past, but he's not the only person to make this point. The gap between the economy and the markets here is worse by, Greg Manarino says this to other people, but the gap at the top in 2007 was never this bad between the economy and the markets. And there's always going to be a gap. They shouldn't trade lockstep. And people say, well, the economy isn't the stock market. No, but there's no such thing as permanent divergence either, unless you have a huge money printing, or the Chinese are buying a crap load of bonds. We have QE 5, 6, and 7. And I'll tell you, Peter Schiff keeps saying he doesn't think they're going to raise rates this year and they're going to surprise people. I'd say there's like a 50% chance he's right, because the commodity index, CRB commodity index, is at 2009 lows, and the dollar is at the highs from the last financial crisis. So the Fed cannot be looking at that right now.
You have to remember, though, it's a 25 basis point hike. It's not a 75 to 100 basis point hike. So I mean, like, looking at the conditions right now and knowing how these central planners act, I probably wouldn't expect them to raise rates. But then at the end of the day, it's been since 2008, 2009 since we've gone on this so-called phony recovery, and they haven't raised rates. I think they just want to set the tone right now and say, hey, we're going to raise rates, and then we could, for a rainy day, we could lower rates when the next crash comes, or when the next hardcore recession comes.
Well, I would say, one thing, too, as far as people bashing Europe, bashing China, America, our houses are still way too big. After the last crash, I don't know if you've noticed a trend, you see compact cars are a lot more popular. Like, I drive a Fiat 500. People are always asking me, oh, what's the mileage? How much does that cost? It looks so nice. They would have laughed at that, 10 years ago. But here's the problem. There was no way after the last crash to go through all our suburbs, and especially here in Chicago. I don't just mean suburbs. I mean the residential areas, literally like in Lincolnwood, just right outside the city border, where you have all these baby boomers. I drive around the Lincolnwood area. I see this. 2 people in their 60s, a house of 6 rooms, and they got their SUV and all this money on their lawn, and it's just a huge.
But people in Lincoln would tend to have cash, though.
They do,
right?
but the amount of space they're wasting just sitting.
Yeah, I know. I totally agree with that.
Sitting on all the baby boomers sitting in houses of 6 extra rooms is a big problem, and we don't really see that in China. We don't really see that in Europe. People in that age group, if you're living in most of the rest of the world, you're not doing that. That's an American phenomenon where people think that they have a right to have all this extra empty space, and then we monetize it from the Fed, inflate the value to a ridiculous level where first-time homebuyers are dropping. By the way, first-time homebuyers, you've probably seen all the graphs recently, completely absent and gone. It's all apartment, and they're building apartments like crazy and cramming people in apartments and charging them ridiculous rents. And it's because they after the crash in 2008, there was no way to downsize these houses. It's easy to downsize your car. It's easy to start shopping at a different place for your clothes. But how do you downsize houses? There's no way to go around with a construction crew and come into your house and make it 30% smaller. It's a really, and the same footprint. Maybe they'll invent some way in 20 years with our existing technology. We reinflated the value of all these assets, and it was the dumbest thing we could have done. It was the worst thing we could have done. And there's so much stagnant money. I keep hearing how the banks are so well capitalized. If you're a bank and you have baby boomers living in a 6-bedroom house and there's 2 of them, and they're barely paying their property taxes, you don't have an asset. You have just a huge liability. And a lot of these people, instead of retiring, moving to a warmer area, they just stay put, and they're like, well, I'm going to stay here in this big ass house. And then you see those creepy commercials at the reverse mortgages, trying to get people's houses out of them through a loophole where they pay you, each month, and you drop dead, and they end up getting a house for $1,000 because you died of old age 2 months into it. But really, if you were to chart out where all the wealth is in this country, by far, it's in the hands of the boomers. And I do think getting them to come into the stock market or add the stocks. They'll ride them, but if they have to ride them down 20%, 25%, who is going to talk them off the ledge from getting out? It sure as hell won't be Larry Kudlow and Jim Cramer, who screwed them in 2000 and 2007. And if people think that CNBC is going to talk the boomers into not selling and staying the course with those people, maybe if they fired their entire staff and changed the studio, but that's the level.
Who knows?
Go ahead.
Who knows? These CNBC people may tell these guys, hey, keep on buying bonds, and that may not be the most ideal situation to buy bonds. No, maybe we should just end this interview. Anyways, before I let you go, how could people follow your work again? Well,
there's Twitter, Panama Orange, twitter.com, Panama Orange, one word, and stocktwits.com, Panama Orange. And there's my SoundCloud page, which is other subject matter you might be familiar with. But
yeah, I think you've told me that. Oh yeah, FYI, before I do let you go, I see all these guys bashing on you, these perma bulls on StockTwits. So,
well,
I don't know.
I don't get a lot of bashing on there. Like I get a lot of my follower counts hit like 2,400 or something recently. So it's not that bad. I think one of the reasons is I'm not in there every day, like just screaming, okay, short every tick higher. I'm pretty careful. Right. You follow me on Twitter, there's sometimes weeks where I don't even take a trade, or like a whole week where I don't take a trade. And I carefully try to wait for specific resistance points based on fundamentals and technicals and volume profile and chart patterns. So, because there's some bears on there, and they have like the bear icon, they're just screaming bearish crap like nonstop. But of course, sentiment-wise, the Investors Intelligence bull bear ratio, that thing has been pinned near 30-year highs for over a year. So the amount of bulls out there is substantially higher. But the trolling problem on there isn't actually it's not as bad as YouTube. I mean, YouTube is in zero hedge. We've had conversations about this where now everyone on zero hedge is making money buying stocks, which is really Slope of Hope too. If you go to the Bear blog, Slope of Hope once was a Bear blog. Look in the comments, and like almost everyone there, not Tim Knight, but the guys who comment there, all patting each other on the back about being bullish, which is funny for a Dow that's been sideways since Thanksgiving. That is like how it's July. It's like July 22nd. Sideways, the NYSE composite sideways for 13 months, and the bulls are like, well, the market goes up every day nonstop. No, it doesn't. Obviously, it's a hell of a lot of resistance, and yeah, it could break. But who's been making money just sitting long, sipping on a tequila, sipping on a margarita? Why would you sip tequila? No one's putting a straw in a bottle of tequila.
Yeah, you can only make money trading, so.
Yeah, well, it's the sentiment is you don't always want to just be bearish because there's a bunch of bulls, but when you get to like 85-90% bulls, as you know, it's kind of like, I saw a sentiment reading on bulls, on volatility and gold. It was like 5-6%. It was like off the charts bearish, and basically you only want to fade sentiment when it gets super ridiculous, stupid, extreme. And right now, stocks and gold and volatility, they're like just mania, stupidity. Everyone, really crowded. And if it was 60%, if it was 70% bullish, that's not extreme. It's a matter of how few bears there are left in the market. Not just that, but of the bears that are left, how many of them even have a lot of capital left? Because there isn't one major hedge fund, CNBC, who's like a prominent bear anymore. There's nobody. There's guys that come out and say, I'm cautious, I'm cautiously optimistic, I'm a little worried, but you cannot name me one fund out there that's aggressively shorting and now, like there was 3 years ago, 2 years ago, 5 years ago. So when people talk about how they're squeezing all these bears, what the hell are they talking about? Who? I mean, they'll pick it's like the fly in iBank coin. There's one guy he always talks about squeezing, this Richard Dowd or something on Twitter, as if 1,000 bulls are going to squeeze one retail trader. It's like you're going to squeeze that one lime and get so much out of it. Like, anyways, but you wanted to wrap the video up. But yeah, that's. I really appreciate you having me on. And I hope I did not interrupt you too many times with my ranting. Because I'm doing
ranting Panama Orange. How about that? That's your new name. Instead of Panama Mondays, we're going to do Ranting Panama Orange.
Ranting, it's you haven't had me on in a while, so there's a lot to review, basically.
Cover, yeah.
There's like a backlog because Don's left YouTube. A few months ago, so that was a backlog too. Anyways, thanks again for having me on. Really appreciate it.
Yep.